What's up guys? Today I'm just going to make a quick video on what is a stock. So a lot of you don't really understand what a stock is. Um, you've heard the term that stock is up, Apple stock is up, Amazon stock is up or it's down. But what is a stock really? And a stock is basically a piece of a company. So you can actually own a piece of the company. So any individual who is an investor who is looking to invest can own a piece of a company if it's a public traded company, meaning that it's not private. So, for example, Apple, Amazon, Coca-Cola, they're all they're all public companies. And for that reason, you're able to buy shares, or in other words, buy stock. So then you, the individual investor, can actually own a piece of that company, like Apple. So that's all good and all, but you know, you don't want to lose money. You definitely want to make money. What's the reason people invest in stocks, right? So you have to understand how this works a little bit. So when you, the investor, buys a piece of a stock from any company that's obviously publicly traded, like Apple, you buy it for a price. So that price can be whatever Apple is selling for. So let's just say Apple's stock price is at $50 a share. You would have to, in order to obtain a piece of Apple stock, you would have to put $50 in. And in return, you would get this certificate here stating that you own a piece of Apple. Okay, so you pay Apple stock $50, and Apple gives you a contract stating that you own a piece of Apple, and you bought it for $50. Um, in order to buy a piece of stock or a share or a stock, you would have to purchase through a what's called a broker. Brokers are basically companies, or it can be a person that can find shares or stocks available for you to buy. Now, you typically have to pay this broker a finder's fee kind of thing. So you would have to pay them a fee. And in return, they'll locate a stock for you, and you will get a stock from Apple. Okay? So that's how it works. Um, but let me get more into what a stock represents. So I did mention that you own a piece of Apple stock. So there's millions and millions and millions of shares out there of Apple stock. Okay? Excuse my drawing. I don't draw this bad. This is just this is just something that I'm using, and it's not working out to my advantage, but you're going to get the picture, kind of. So there's a big pie of Apple stock, and let's just say there's 1 million uh, of Apple stock to buy from, and you purchase one share. So this is your piece of the pie. Okay. Um, what happens? How do you make money off this? How do you make money off a stock? People are wondering. Well, if Apple, let's say, grows from here, so um, they're doing good in sales, which they've always been. They created new products. Um, they hired a new CEO. You know, let's just say these are all good things, right? And then Apple's company, they were worth, let's say, 20 million in 2010, and now 5 years later, 2015, they're worth 68 million. Those shares, and yours included, are now exactly what are all made up of $68 million now instead of 20 million. So they divided a million shares into 20. But now since Apple's company has grown to 68 million, your by reason your stock or your share goes up in value also because it's a piece of that pie. So you have 1 million of Apple stock available. Once you buy it in 2010 for, let's say, $50, and Apple stock has grown exponentially since then, and it looks like it's more than doubled its valuation. So let's say you make $50 off of this 50. So it's more than that, but let's say for the sake of argument, in 5 years you make $50. Now your $50 investment is worth $100. So you've doubled your money. Of course, this is a very simple example, and this is in a perfect world where you would just double your money in 5 years. But let's say you bought more than just one stock, right? Let's say you bought 300 shares of Apple at that given moment. So you would have paid $1,500 for Apple stock at that time in 2010. But now, since Apple has grown, it's made revenue, it's made profit, it's created new products, it's hired a new CEO, and it's up at 68 million, then you're looking again. You doubled your money. And you made at least $1,500 more. So you put in 1,500, you got back 1,500 after 5 years. So your money's growing just by you believing that Apple was going to grow. And that puts money in your pocket, right? That equates to money in your pocket. So the same holds true for stocks that go down, right? So when you have a stock going up and you're buying, you make money. If you have a stock going down and you bought it, you lose money. Okay? So this happens all the time, unfortunately. but you have to do your own research when you buy a stock. And you want to know what to research, right? You want to know what their position is. Do they have a competitive advantage, amongst their peers? Like, is it Coca-Cola that you're investing in? Who are their competitors? Well, their competitors would be someone like Pepsi. How good is Pepsi? Pepsi's really good, so it's a very, very competitive market when you want to buy Coca-Cola, because you got Pepsi on the other side. Um, when you purchase a stock like McDonald's, who's their competitor? Burger King, KFC, Arby's, In-N-Out. Those are competitors. And then you want to check fundamentals. What are fundamentals? You want to see what their profit has been the last 3 to 5 years. Who is their CEO? And what are they capable of? Are they a good CEO? Have they been in another company? And what have they done with that company? What are their credentials? Revenue, profits. How are they investing their money? Amongst other things, those are the fundamentals. And 3, have they gotten in trouble recently, like Wells Fargo and the SEC? What's their reputation looking like? 4, where do you see them going? What's their growth like? How has their growth been in 5 years? Things like that you'll want to research about these companies. You don't want to, you don't just want to go in because they're making iPods or they're making iPhones. You want to go in, dig deeper, and why is this a smart move to put your hard-earned money in this company? Okay, so this is part 1 of what is a stock, and if you guys like this one, I'll make another one, but this is as far as I'll go on this video. So if you guys have any questions, just leave a comment.